Alright guys, so in this video we'll go through a trade recap from yesterday, and it was a loss, but I'll go through how that same trade idea could have been a win if I had done things correctly. And I will show you guys also a realization that I had, that an issue that I've had that I actually never really realized, and I couldn't put into words what the issue was. A lot of times when I was trading I would experience it, and it usually leads to losses when I have this kind of problems. So let's start on the daily. Yesterday was obviously a very bullish day. We had CPI yesterday night. This was yesterday's candle, and prior to that it was just kind of ranging for the past 3 days. And so prior to that I was just thinking it's either it wants to go down to this daily fair value gap or it wants to go up to the buy side liquidity, and I didn't really have a very clear bias for the past few days. Now going on the 4 hour, from yesterday it was actually bullish. So yesterday I had a bullish bias here yesterday, like around here, and we have a 4 hour fair value gap right here under this line. We have it right here. Now going down to the 1 hour, we have a 1 hour fair value gap right here. So if we use this indicator, that was our Asian session, this is our London session, and this is my New York session, right? So coming into yesterday I saw that okay, we have a 1 hour fair value gap, we have a 4 hour fair value gap, we are bullish. I went down to the 30-minute. It was 2 a.m. we have this 30-minute fair value gap right here, and we have a 30-minute order block right here. So yesterday what happened was I just looked at this 30-minute order block. It went into the 30-minute order block, and then on the 5-minute we get a 5-minute fair value gap right here. On the 1 minute, after we get into that 5-minute fair value gap, we create a 1-minute fair value gap, right? Until a little bit late, but still we got 5-minute fair value gap, 1 minute fair value gap, and we had a 30-minute order block as like a higher time frame confluence. And we have a drawn liquidity here, that buy side. We have a drawn liquidity here, some more liquidity, and we also have a drawn liquidity here, which is our Asian session high. Right, so we actually do have drawn liquidity. We have our entry model, we have our higher time frame, and we have it being like an optimal time. And we also kind of swept liquidity here, I guess, like all this liquidity here, because I saw that all these were like equal lows ish, like relative equal lows, and it went down and just started going up, and we created this 5-minute fair value gap after sweeping all these lows. So I was like, that should be a valid entry, and that should be a valid trade, right? And I ended up losing. And then I was really thinking whether that was a valid trade or not, and only after some reflection I realized that was really not a valid trade. And that's why I was really annoyed yesterday, because if it's a valid trade and you lose, then that's okay. But if it's not a valid trade and you lose, then that is not okay, because then that's purely your fault. It's not your model's fault. I did some thinking and I was trying to figure out what was wrong with this trade, because we've got all of the confluences that I wanted, and it was also within 2. It was after 2 as well, so it's within London session kill zone as well. So right now, just before I review what I realized was wrong, comment down below what you think was my mistake. Okay, what I realized was wrong was the order that I was thinking in. I had my bias, which is bullish. I had my draw on liquidity. Instead of looking at the 4 hour fair value gap or the 1 hour fair value gap that I marked out, I saw an entry, which is the 5-minute and the 1 minute, and then I started looking for a higher time frame POI that would support this entry, which is this 30-minute order block. Notice how, I don't know if you guys have watched my previous videos, but I have never, or not never, but I rarely ever use 30-minute order blocks. That's just something that I kind of pulled out. I just saw that it was there, and that added to my analysis, that added to my trade idea, and so that gave me the idea of like, okay, I'm probably right. So then I took this trade. And this happens when you want to be right so bad, and when you really want to take a trade. Because I really wanted to take a trade. I've been losing for the past few days, and I really wanted to make it back. So it might be a combination of revenge trading, it might be a combination of illusions and just giving yourself confluences out of nowhere. But to really put into like words, what I did was it was just I got the order wrong. Instead of focusing on looking at the confluences first, I saw the entry model first. I saw that it took the 5 minute first, and I was really focused on that entry. It was a perfect, like a really, really good entry model there. And I just pulled out a confluence, a higher time frame to aid with that. So instead of doing that, this is how every trade should be like, at least according to my plan. I was doing reflections yesterday. I was looking back and thinking about what I was doing. And I realized that when I really want to revenge trade, or when I really want to pull out a trade, or when I really want to win, and I'm just not in that, observing mindset, and I'm not in the mindset to observe trades, and I'm chasing trades, what happens is I end up messing up this order. Instead of coming into the market looking for the bias, looking for the confluences, like the higher time frame, and then looking at the trade idea, and then looking at the entry, I mix it around. I think yesterday I had this narrative first, and then I had the trade idea of I want to buy. And then I looked for an entry. I saw that 5 minute and I saw a 1 minute, and then I looked for a confluence to back that up. And that is wrong. You should be looking for the confluence first. You should be looking at the higher time frame first. This confluence basically just means like higher time frame POIs, or higher time frame fair value gaps, and higher time frame order flow, like what the higher time frame order blocks and fair value gaps are doing. You see that first, and then you think about whether you want to take a long or sell, and then you look for the entry. That's how I usually do it. And if you look at my other videos, it's actually usually in this order without me even realizing. That's how I usually explain my trades. I always look at the bias first, and then the higher time frame, and then the trade analysis, which is like whether it was a buy or a short, whether it was a buy or whether it was a short, and then whether like what my take profits is and what my stop loss is, and then I look at the entry. Right? If you look at my videos, it's usually in that order. But yesterday, I actually messed it up, and I was just looking for a consensus loss, and that's usually a really bad thing, because it means that I just really want to take a trade, and I'm looking for things to back it up. Now, if we were to redo this trade and to look for it in terms of confluence, trade idea, then entry, then we would see that we have this 4-hour fair value gap here, and this 1-hour fair value gap here. We would then wait for it to enter one of these levels. So we would ignore this one because this is not what I was looking at anyways. And we will see that this is our target, this is our target, this is our target. This is our 2 higher time frame points of interest that we want to look at for price to potentially react off of. We see that it tapped into here, and then we can go into the 5 minute or the 1 minute to look for something, right? If you wanted to look for a 5 minute, we can do it here and target probably that, because we have that sweep of liquidity right here. That is not Asian session lows though, but that's not Asian session lows, but we still have that 1 minute shift right here with that 1 minute break of structure, and you could have entered there as well. And it was also after 3 p.m, which is usually a bit more like 3 a.m. New York time, which is usually more likely than 2 a.m. New York time. Yeah, if you just did it in that order of looking at the confluences first and then seeing reactions, you would get the entries better. You see that, and then you see whether it swept liquidity or not, and then you see whether we got an entry model or not. And after we tapped into the 4 hour, we got that 5 minute. And to be honest, I think I probably would have done that. And targeted that buy side there. The main idea is just that this should be the order that I'm looking in. And after realizing this yesterday, I think it would really benefit me a lot moving forwards, because I couldn't put to words before what was the wrong thing, because there was still all the confluences there for this trade. And that's how your brain messes you up, and that's how your brain gaslights you into looking at these things. Yeah, I hope that this video has helped you guys, and I'll see you guys in the next video. Bye.